Joining us now is Ricardo Evangelista, FX strategist for ActivTrades. Ricardo, good to have you with us. You look at the JOLTS data from yesterday. It's almost 2 for 1, 2 jobs for every 1 unemployed person out there. Does this lower the bar? We love a bar on this show. Does this lower the bar to 75 basis point hike in September? Is it a shoo-in? Good morning.
Good morning, Manus. Thank you for having me. Yes, I mean, I think employment data will be very important for the Fed's decision-making process at this stage. I think the expectations at the moment point at the continuation of the growth for US employment. So new jobs are still being created, albeit at a slower pace. And this vitality within the US economy, this resilience, somehow feeds into the argument that the Fed has been defending, that the primary objective must be to control inflation. So against this background, I think it is fair to assume that the planets are all aligned for the Fed to raise interest rates by 75 basis points in September.
And Ricardo, this goes, just looking through your note, I mean, strong dollar calls throughout, strong dollar versus euro versus sterling versus yen. I mean, is there anything in your mind that could change that trajectory, change the trajectory of an ever-present strong greenback?
At the moment, it is difficult to see an alternative scenario. From whichever angle you look into the current situation, it is difficult to identify a different path than the one you described there, Dani. So the dollar is pretty much looking stronger against any other major currency. So I don't see anything else within the realm of the possibilities that we could expect that would change in the situation. So I would agree with what you said and expect the dollar to remain strong.
I need some excitement in my life, so let's break up this. I mean, we've had the world and its mother come in here and say, King dollar, King dollar. Yeah, we've got to move on here. What about dollar yen? I mean, it gets to 140. So run me through. We had Nouriel Rabini with Dani and I, and he said 140 breaks the Bank of Japan. It'll bust their yield curve control. Come on, frisk this up a bit. What breaks? What snaps? I mean, we can't all just bang into dollar. Something's got to break.
Well, the conditions at the moment, there's a lot of geopolitical uncertainty. The perspectives for economic growth, for global growth, are not very optimistic. So one would expect the current environment to somehow support the yen here. However, that safe appeal of the Japanese currency has been somehow diluted by the strength of the dollar. So once again, it's a narrative that is dominated by the strong dollar. I mean, you will not want to hold on to yens, despite the extreme attractiveness of the Japanese currency during times of high inflation. As you know, Japan is almost magically immune
here's the thing, Ricardo,
to inflation.
Which I think Manus was hinting at. It's, you know, you have chatter just at this point about intervention, but you have had officials from China to South Korea to Indonesia already contemplating this idea of intervention with a strong dollar because of the impact it's had on them. Are you expecting more currency intervention, especially from more developing nations who have been at the fate of a strong dollar?
Well, it depends how bad things get. Look, things can get into a point where a very strong dollar will be very detrimental to some economies. We could even talk about the euro, how a weak euro in relation to the dollar can damage the situation in Europe and further exacerbate the ongoing inflation problem. So it wouldn't, I mean, I wouldn't totally rule it out, but I think at this stage, I can't see it happening yet.
So I'm desperate for something that gets me excited beyond King Dollar, but maybe then that emboldens a contrarian call, which is maybe a much larger rate hike from the ECB, even in the face of an electricity and gas prices, which Martin Malone warned us yesterday, has to be dealt with fiscally, and monetary policy just needs to get on and get shocking in terms of grappling with inflation. What's the risk of an outsized 75 bip move from the ECB? Let's pump that one. Go on.
Okay, if you really pin me down like that, Manus, then I would say
I am. We're going for it.
Maybe 33% chance of a 75 basis points hike by the ECB. However, we must take any hints from European Central Bank officials that they are indeed very committed to just get on with their job and leave everything else to the fiscal side. We must take that with a pinch of salt. It's a very easy win for ECB officials to come out in public and speak like that and say such strong words and say, no, we are committed. They are telegraphing the idea that they will do it. This will have an immediate impact in the markets. It will somehow ease the situation for the euro, and this is a cheap way of achieving that. Whether or not they
Ricardo,
will go ahead, we will see.
I got to squeeze this in because, you know, they're talking about this, and if anything, what's been supporting the euro getting back to above parity has been higher stockpiles of energy. But I'm wondering, Ricardo, do markets accurately have priced in at the moment just how bad things could and are likely to get in Europe this winter?
No, I don't think so. No, I don't think the worst case scenario. The worst case scenario is not yet priced into the value of the euro. That's for sure. That the worst case scenario, which would entail a complete cutoff of gas supply by Russia to Europe, would have serious consequences for the economy. So we would see a dramatic slowdown in activity in Germany, for example, and this would be very bad news for the euro. And that case.
And what price? How low does it go, Ricardo?
It could go as low as 0.95 to the dollar.
Okay, Ricardo, we'll have to wrap things up there. Thanks so much for joining us this morning. Ricardo Evangelista, FX strategist at ActivTrades.